Business owners, the person stealing from your company may not be a stranger. It could be someone you trust, an employee, a manager, a bookkeeper, a vendor, or someone who has discovered that nobody is checking. And here's the frightening part. Fraud doesn't always start with someone planning to steal thousands of dollars. Sometimes it starts with one small transaction that nobody notices. Hi, I'm Us Melbourne, founder of Melbourne Accounting Solutions. Today we're discussing something uncomfortable but extremely important. How do you protect your small business from financial fraud? Large corporations have accounting departments, internal auditors, approval systems, and sophisticated controls. Small businesses often have something very different: trust. Trust is important, but trust without financial controls can become expensive. Imagine you own a growing business. You've hired someone you trust to handle the bookkeeping. They enter supplier invoices. They prepare payments. They reconcile the bank account. They have access to online banking, and they produce the financial reports you review. Sounds efficient, but there's a major weakness. One person controls almost the entire financial process. Suppose that employee creates a fake vendor. A small invoice appears, $950. Nobody notices. Next month, $1,400. Then $2,800. The payments are small enough to blend into normal business activity. A year later, tens of thousands of dollars could potentially be gone. And because the same person processing the transactions is also reconciling the bank account, who is going to discover it? This is called a control problem. One of the most important principles in accounting is called segregation of duties. In simple language, don't give one person complete control over a financial transaction from beginning to end whenever practical. For example, ideally, the same person shouldn't independently be able to create a vendor, enter an invoice, approve the invoice, issue the payment, and reconcile the bank account. Why? Because there's no independent checkpoint. Here are several controls even small businesses should consider. 1. Review bank statements. Business owners should periodically review bank and credit card activity. Don't just look at the ending balance. Look at payments, transfers, unusual vendors, large transactions, and transactions you don't recognize. Your involvement itself can be a powerful control. 2. Control new vendors. Before a new vendor is added to your accounting or payment system, verify who they are. Confirm banking changes independently using trusted contact information. This is especially important when someone emails, "We've changed our banking information. Please send future payments here." Don't automatically trust the email. Verify the change. 3. Require approvals. Establish payment approval thresholds. For example, larger payments may require additional authorization. The appropriate limits depend on the size and structure of your business. The objective isn't bureaucracy, it's accountability. 4. Review payroll. Payroll fraud can be surprisingly simple. A fictitious employee, unauthorized overtime, incorrect wage rates, payments continuing after someone leaves. Business owners should periodically review who is being paid, how much they're being paid, and whether the payroll information agrees with actual employment records. 5. Reconcile. Your accounts bank reconciliations are not meaningless accounting paperwork. They're an important financial control. Bank accounts, credit cards, loans, accounts receivable, accounts payable, payroll accounts. Regular reconciliations help identify discrepancies before they grow. And fraud isn't always an employee. Today's businesses also face increasingly sophisticated external fraud. Fake invoices, phishing emails, CEO impersonation, vendor payment diversion, compromised email accounts, fraudulent wire instructions. Someone may send your accounting employee an email that appears to come from you saying, "I'm in a meeting. Send $25,000 to this account immediately." Your name may be correct, your email may look almost identical, the request may sound urgent. That's exactly why financial controls matter. Urgency should never override verification. Trust your people, but design your financial system so trust is never your only control. Good controls don't mean you distrust your employees. They protect your company, your employees, your customers, and your reputation. Here's something practical you can do this month. Take 10 minutes and randomly select 5 vendor payments, 5 credit card transactions, 5 payroll payments. For each one, ask, who authorized this? Is there supporting documentation? Do I recognize the vendor or employee? Does the amount make sense? Was the payment independently reviewed? You may learn more about your accounting system in those 10 minutes than you expect. One more warning. If you suspect fraud, don't immediately start accusing employees or altering records. The appropriate response depends on the circumstances and could involve accounting, legal, employment, insurance, cybersecurity, or law enforcement considerations. Preserving evidence can be extremely important. Get appropriate professional advice before taking actions that could compromise an investigation. At Melbourne Accounting Solutions, we don't believe accounting should simply tell you how much money your business made. Your accounting system should also help protect what you've built. We can help business owners review bookkeeping processes, payment procedures, reconciliations, approval structures, and other financial controls to identify weaknesses before they become expensive problems. If one employee currently controls almost every financial function in your business, don't wait until money disappears to review your controls. Contact Melbourne Accounting Solutions. Let's help build a financial system designed not only for growth, but for protection. Here's today's CEO question. Could one person in my business create a fake supplier, approve an invoice, send the payment, and hide the transaction without anyone else noticing? If the answer is yes, you don't necessarily have a dishonest employee, but you absolutely have a financial control weakness, and that's something worth fixing. I'm Everald Melbourne, founder of Melbourne Accounting Solutions. Our mission is simple: to help Canadian business owners make smarter financial decisions, reduce unnecessary taxes, protect what they've built, and build stronger businesses. If you found this lesson valuable, please subscribe to our channel so you never miss future Canadian business, tax, accounting, and financial insights designed to help you succeed. And if you're unsure whether your business has the right financial controls in place, contact Melbourne Accounting Solutions. Let's identify the weaknesses before someone else does. Helping Canadian business owners learn, grow, prosper. Thanks for watching, and I'll see you in the next lesson.